Hidden in the new tax bill that was passed by the House is something called Trump accounts. Now, these were initially called the MAGA accounts in the first draft of the bill, but they're called Trump accounts. These are tax-advantaged accounts that you can put money in for your kids to save and invest that can be used for college, for starting a business, for buying a home. There's so many incredible uses to these. I'm going to break it down in today's video, and I also want to compare it to 529 accounts and Roth IRA as well, another popular place where you could be saving and investing for yourself or your kids. I'm Matt Sorensen. Let's build wealth. All right, now let's break down the Trump accounts. Now, the first thing I love about the Trump accounts is they're not just about saving for college. You can use these Trump accounts, the money you're putting in, the growth that you're going to have from it to pay for college, but it can also be used for a first-time home for your child or for starting a small business. Now, you can put up to $5,000 a year into these Trump accounts. There's a bonus I'm going to talk about later here that the government's going to put in for you, but right now you can put in $5,000 a year. Now, these are for kids under the age of 18. So let's say you drop in $5,000 for the year, and let's just give an example. Let's say that you have an 8-year-old and you're going to put $5,000 in for the next 10 years. Okay, here's what that's going to look like at an 8% annual return. That's going to be $50,000 of contributions and $28,000 of growth. Well, the government's like, we're not taxing you as that money's growing, but when you start pulling out this money later for any of these qualifying expenses, education, first-time home buyer, starting a small business, any of those qualifying purposes, you get capital gains rates on the investment gains that you had. So, for example, we had $28,000 of investment gains here. Capital gains rate is 20%. 20% of $28,000 is $5,600. Okay, so I will pay some tax as I'm pulling it out, but I got all of that growth and deferral over that 10-year window in the example there of investing and growing that money. Now, if you pull the money out of this for non-qualifying purposes, the gains are taxed at ordinary income rates plus a penalty. Okay, that's not great because that means you're going to pay more tax to the IRS on the gains. Ordinary income rates are higher than long-term capital gain, and there will be a penalty added on top of it. All right, now how is this money invested? Now, the plan here on these Trump accounts is they're going to be invested in U.S. indexed equity funds. Okay, what that means is the money's being invested in U.S.-based companies in an index fund format. This is going to grow over time. This is basically going into the U.S. stock market. So I don't love that we have limited investment options here. I wish there was just like a Coverdell ESA that you could self-direct and invest in real estate or a private company or a startup or crypto or the stock market. No, we're not going to be able to do that. Instead, you're just going to have to invest in these government-approved U.S. index funds. Now, one thing that's unique about these Trump accounts is when you access them, and here's the rules on that. At age 18, you can access half the balance of the Trump account, okay? At age 25, between 30, you can access all the rest of it, and by age 30, you must have drained the whole thing. Okay, now remember, we're using this for qualifying educational expenses, we're using it for purchasing a first-time home, or we're using it for starting a small business, okay? Those are the three qualifying uses of the Trump accounts. Now, there's a unique little perk in these Trump accounts for children born between 2025 through the end of 2028, where they get an extra $1,000 free from the U.S. government seeded by the Treasury Department. So if you have any kids here, they're going to get this start off with a free $1,000 that can be invested. It'll be growing and they'll be able to access when they're at age 18. Now let's compare this to 529s and also want to compare it to Roth IRAs here in a second. Remember, when I'm putting money into a 529 or into these Trump accounts, I don't get a tax deduction. The benefit is this tax deferral. As I'm investing the money, I don't pay any tax. All that money gets to be reinvested. However, in a 529, when I pull the money out for qualifying educational expenses, that's the only use you get, you have no tax on the way out. This is different than paying capital gains tax like you have on a Trump account. So if your purpose for sure is I want to use this for education expenses, and frankly, we don't really know for our kids, but let's say you do, the 529 is a better deal because it comes out totally tax-free for qualifying educational expenses, similar to a Coverdell education savings account. However, you must use it for education, and that's not what's best for every kid. So I like how the Trump accounts can be used for starting a small business or for a first-time home purchase. So a lot more uses for the Trump accounts than a 529, but the 529 wins out if we're just talking about college education expenses. Now, both of them have the downside of you don't have great investment options. These are government-approved U.S. index funds typically, whether it's a 529 or the Trump account. This is not like your Coverdell or your Roth IRA that you can self-direct and choose the investments you want to make, so don't love that. And then also the Trump accounts have this interesting 18, 25, 30 year years of age when you can access those funds and how much. The 529, on the other hand, you can use at any age as long as it's for qualifying educational expenses. So that's a little breakdown between Trump accounts and 529s. Now, the last thing I want to point out here is a Roth IRA for college saving for your kids. If you are a small business owner, the first thing I want you to think about is a Roth IRA for your kids. Let's get them employed in your business, start paying them out of your business. You'll take a tax deduction for that out of your business anyways. We'll put the money into a Roth IRA for your kids, and we'll start growing and investing that. The nice thing about a Roth IRA, you can put $7,000 in a year and you can invest it whenever you want. You're not limited to these government funds and approved index funds in the stock market. You can self-direct it. You can invest it in individual stock. You can invest it in real estate. You can invest it in crypto or a startup. That's what we do every day at our company, Directed IRA, helping clients invest their IRAs, 401ks, Roth IRAs into these non-public alternative assets, things like real estate, crypto, and private funds that are becoming more and more popular because they create diversification and they can provide better returns. Now, keep in mind on a Roth account, when you put money in a Roth account, all right, let's say you put $7,000 a year into a Roth account for 10 years, okay, $70,000 of contributions. And let's say the account's now worth $130,000 from all the investment returns, okay? Well, I've got $60,000 of investment returns and $70,000 of contributions. Let's say you did that for your kid. Now they're 18 and they want to go to college, or they want to start a business, or they want to buy a home. Well, what can they do? They can take the 70 out with no tax, no penalty. The contributions that they put into the account, they can always take out for any use. It doesn't have to be qualifying. It's only the investment returns and gains in a Roth IRA that they have to wait until they're 59 and a half for. Let them have that head start at age 18 with that additional money of those investment returns and gains, and let them continue to compound that over time. Now, I've got more videos and content on how to self-direct your IRA, invest in alternative options. Make sure you go check it over here. Also, it will be in the link below. But I want to hear what you guys think in the comments about these Trump accounts versus the 529 versus the Roth IRA. What would you be using for your kids to help them get a head start financially? The things we probably wish for when we hit age 18 and we're in our 20s. What are you doing and planning for? What do you think is the best option? Also, please subscribe to my channel. I'm giving a lot of tips here on tax planning, asset protection, retirement accounts, building and growing wealth. I'm Matt Sorensen. We'll see you next time.